Good morning. Welcome to my YouTube channel. I would really request you to please press like and subscribe so that you can get notifications for all the future videos that I'll be uploading on my YouTube channel. Today, what we're really going to talk about is really investing in COVID times. We've really seen that India has been in a severe lockdown for the last 2 months. Millions of SMEs really have closed down. Millions of people have really lost their job. The job situation in India is very, very bad. Please see the link below where I have made a video in terms of the present situation as far as jobs in India is concerned. Keeping this in mind, it clearly shows that the economic conditions in India are not really very favorable. Slowly, as India gets up and is looking at opening up in terms of post-COVID, probably 1st of June, most of the Indian states and cities would probably open up. What really happens to my investments? A, should I keep investing? B, should I stop investing? Or should I really redeem my investments? The present circumstances have really taught one very big lesson that A, there is a lot of uncertainty as far as the future is really concerned. So a lot of us who are small entrepreneurs and businessmen or traders, we really don't know in terms of the uncertainty, in terms of how the market would really be, what sort of demand would really be in the market, and will we be able to sustain the operations? Keeping these uncertainties in mind, maybe we may have to tap into the reserves and the investments we've already made. Similarly, if we are professionals or educated people really in the job market, there is a lot of uncertainty really there in terms of overall job security and also in terms of increments of jobs, if any, that are going to really happen probably for the next 12 to 18 months. Under these circumstances, if there is a pending liability to be paid, or really there is a problem in terms of survival, there is no other choice that is really left but to redeem our investments. So the prudent thing would be to redeem a part of the investment slowly as certainty progresses. Say, for example, our monthly needs is about 100,000. Then what we really do is, instead of redeeming all the investments that we made in the capital markets, we just redeem 1 month at a time. That way, it really helps in compounding of rest of the returns as far as the rest of the investment is concerned, and really gives us time in really realizing what will really happen to the overall market. In March of 2020, a phenomena that happened that has never happened in 100 years. All asset classes, equity, bonds, gold, and commodities, all four major asset classes turned negative, which is extremely, extremely rare. Normally, there is a negative correlation between a lot of asset classes. As far as gold is concerned, as far as equity is concerned, they're negatively correlated. When I say negatively correlated, what really happens is when the equity market crashes, the gold really goes up. What have we really seen? In the last 12 months, gold has given phenomenal returns in excess of 25% when equity markets have not really given the returns. Also, we saw on 20th April 2020 a phenomena wherein the future price of crude turned negative. The details of the future price of crude are present in the link here. Please have a look at that video. It will really illustrate that yes, commodities can go negative and how the future prices have turned negative. However, from the commodity lows of 20th April and the equity market lows of March 23rd and 24th, we've come a long way. There has been a recovery in the capital markets. So in these uncertain times, we really don't know where to invest and what to do. The key to investment in this is invest and diversify across asset classes. Please ensure that you put money in equity markets because valuations are good and the returns would really come in. Second, please ensure that there's a portfolio maintained as far as good quality debt paper is really concerned. Three, invest as far as gold is concerned. And four, some part of the investments as far as commodities are really concerned. Once you have a diversified portfolio at the portfolio level, even in case one asset class really, really crashes, the other asset class really gives stability to the portfolio. We really don't know whether the recovery is going to be a V-shaped recovery or is really going to be a U-shaped recovery, or it's going to be a start-stop kind of phenomena, which would be a W-shaped recovery. Hence, the equity markets may have really rallied and may have really done well over the last 1 month. But once the market realizes that there is more uncertainty associated with it, the markets would fall further. A lot of us have been very disappointed because we've really seen negative returns in terms of the NAV, the net asset value, as far as the investments are concerned. Please remember that in these uncertain times, in the shorter term, you will always have negative returns in place. However, when you look at it in terms of a long-term perspective, which could be anywhere between 12 to 36 months, the returns will be positive and will really reward as far as the loyal investors are really concerned. Hence, the fundamental things that this pandemic has really taught us. One, the future is very uncertain. Future is very uncertain, and we really don't know whether we're going to make the same amount of money probably next month, next quarter, or next year. Hence, all of us should take a pledge and really inculcate the habit of saving and investing. Ideally, 20% of our earnings should be saved and invested. This is the minimum that should be invested. It can go higher. There are a lot of circumstances associated in how much you should really save as far as your income is concerned, which I would be covering at a later point. However, in these uncertain times, please remember, investment is the key. Keep investing in the market. Keep investing on a regular basis. Probably look at it, a SIP, systematic investment plan, wherein you allocate some amount of capital every month to your asset class. Look at all the asset classes. Please look at equity. Please look at the bond market. Please look at gold. Look at commodities, and look at insurance as well. Extremely important, because in these kind of uncertain times, where there is uncertainty of life as well as livelihood, insurance will play a very important asset class as well. Hence, don't get disappointed. As far as the short term is concerned, you may have very turbulent markets. The markets could turn negative for a couple of months, could do very well over a period of time. And since most people that make investments in the markets are not real experts and do not really have a wherewithal to really shop the market or take appropriate positions, the ideal advice I would like to give all my friends and investors is diversify your portfolio and keep investing some part of your savings as far as all asset classes are concerned. In the next 12 to 15 months, there will be a recovery as far as the economy is concerned, and even as far as the stock markets are really concerned, along with the bond markets. However, we don't know when it's going to recover and how soon. Hence, please look at rupee cost averaging. That is, you keep investing small amounts over a period of time across asset classes so that you can get the best in terms of the overall investment portfolio. Please remember, there was a time when we said that we would probably require only our savings and investments when we retire at this age of 60. But COVID-19 has really taught us that we may not really have time till the age of 60, and we may not have a job till the age of 60. Hence, in these uncertain times, keep investing a part of your earnings so that you're prepared for contingencies that really are there in terms of COVID or something else in the near future. Thank you so much, and be safe.